Welcome back to the real world. It's 2025, time to thrive in 25. And what we're going to be looking at today is what the real estate market is expected to do in 2025, because who doesn't want to know that, right? And if you don't want to know that, just keep on scrolling. You don't have to listen. But for those of you who do want to know, please hit like and subscribe, because that way it tells YouTube that you like us and they will connect you with our videos every time we drop a new one, and we do so several times a month. And my name is Lorraine. I'm with the Glover Agency in Fenton, Michigan, and I love to make videos about MidMichigan, my favorite place in the whole world and the place that I call home. What can we expect in 2025? Well, before we go there, can we just go back to the last quarter of 2024? What happened there? It felt like the market kind of came to a halt. We generally see a little bit of a drop in the last quarter of the year from the previous quarters, and it's usually around a 10% drop. But this year, with the election, it was predicted that we probably were going to drop another 5 to 6% on top of that. So we had a considerable drop in the market, at least in the amount of homes that were being sold and homes that were being listed in the last quarter of last year. And when a lot of people were holding off, I think because of the election, as well as it being the fourth quarter. And, you know, we had the election, we had Thanksgiving, and we only had 3 weeks in between Christmas and Thanksgiving this year. So it all kind of happened kind of fast. So those people who waited till after the election ended up kind of waiting, and that kind of translated into waiting till after the first of the year. And so here we are in 2025, and we've got a lot of pent-up demand for housing that is also coming into the first of this year. So let's take a look at what we can expect when we're coming in to 2025. In general, interest rates are staying the same. As a matter of fact, Fannie Mae, the National Association of Realtors, and Wells Fargo have all kind of thrown out their predictions for the year. And my friends over at Keeping Current Matters averaged those all out. And basically what they came up with is we're going to see an overall change in interest rates of about 0.5%, 0.5%. Now, that's not really going to make much of a difference in your payment, but it may change what you pay for your home. And why is that? Again, we've got that teeter-totter going. You've got your home prices here, you've got your interest rates here. If that rate drops even 0.5%, more buyers are going to flood the market, pushing the pricing up. We're still going to be seeing some bidding wars on some homes. Pricing is staying pretty steady, and the interest rates are not expected to do much this year either. Now, if you're a seller in this market, the news is a little brighter. You're still going to be getting about 100% of what your asking price is for your home, with the understanding that you priced it right to begin with. Now, this is not the market to try to test or to try to push your price. Buyers are educated. They know what your home is worth. They know what the average home in your neighborhood goes for, and they're just not going for the really high-priced homes. If you put your home on the market and you're getting showings but not offers, you're priced too high. And you buyers don't even have to tell you this. They just will not offer on homes that they perceive to be too high. Now, if you're getting showings and you've gotten some lowball offers, probably your purchase price is your actual price for your home, or the value of your home is probably somewhere in the range of those lowball offers, or somewhere in between that offer and the price that you put on your home. So pricing is, of course, as always, very, very important. And remember, buyers know that they only get one chance to negotiate the price of the home, but they can always change their interest rate if things become more favorable for them down the road, which is where we came up with that whole saying, marry the house, date the rate. I know it's very simplistic and cliche, but it is true. It still holds true. Also, as a seller, you're going to see your home on the market for a little bit longer. Just a couple of years ago, the average days on the market was like 7. And now we're seeing average days on the market of around 30 to 40 days before they get an offer. And this is how we know the market isn't going to crash, because the National Association of Realtors, Wells Fargo, Fannie Mae, they're all predicting that we are going to have a 3.3 million house shortage this year. And that is on top of the fact that they expect to sell about 700,000 more homes this year than last. We still are not going to see the inventory keep pace with the market. It's still very low. And what is causing the inventory to be low? Is it because a lot more buyers came into the market during COVID? I think that might be part of it. The other thing I think that is really, at least in my area, we don't have any building going on. I mean, it's very, very few builders are building neighborhoods or homes in this area. Now, back in the 1990s and early 2000s, early to mid 2000s, the area that I live in must have been seeing, I bet we saw 15 neighborhoods go up with well over 100 homes in them. And I mean, everywhere you turn, there was a new neighborhood going up, a new neighborhood going up. And ever since the crash of 2008, that has just come to a stop. Builders used to build neighborhoods, and then they would build what we call spec homes. And those were like, maybe 4 or 5 homes that they would build every year that were going to be built for a potential buyer that they could move right in. So it wasn't like somebody came in and said, "Hi, I'd like you to build my home. Here's my deposit." This is something that the builder was doing on their own. And then, of course, you'd have somebody come into the market from a relocation or whatever, and they would end up buying that house and living there. We're not seeing that now. The market is always driven. It always moves. And I say it moves based on the 5 Ds, and that is diamonds, diapers, divorce, downsizing, and death. Those things are always happening. They're life events that are not going to stop regardless of what's happening outside, COVID, market crashes or whatever. You are always going to have people coming into and or going out of based on those 5 Ds. So if we've got a 3.3 million home deficit this year, and that isn't corrected, and it continues to grow at the pace that it's growing at, that doesn't really bode well for a buyer's market, because we are going to end up having about a 20 million home shortfall in probably 6 or 7 years. So let me explain to you as realtors what we call a seller's market, a buyer's market, and what differentiates those two. Well, first of all, a seller's market, which we are in now, is generally anything between 0 to about 4 months of inventory. Right now, we're at 2 to 2.5. In MidMichigan, I expect that that's going to probably go down to about 2 once we hit our spring buying season, which is right on us right now. So pretty soon that's going to drop a little bit in most areas, because people will start flooding the market because they need to buy homes and they want to get moved while the weather is good here in Michigan. And so typically that's going to be your seller's market. We call a balanced market anything with inventory of 4 months to about 7 months. And all a balanced market means is it's really not favoring the buyer or the seller in most cases. And then a buyer's market is when we have 7+ months of inventory. Now, as an example, in 2008, 2009, we had 13 months of inventory on the market. That's 10, 11 months more than what we currently have. And we're still, and this 2 to 2.5 months of inventory that's on the market literally took nearly 3 years to get there. Because back in 2022, it was, barely a month's worth inventory on the market. And over the last 3 years, that has only grown 1 to 1.5 months. And we're still a good 1.5 months inventory away from what's considered a balanced market. So we're moving in that direction, but we're moving slowly. There's no speed happening here. And of course, anything could cause this to become, we could have even less inventory. So I'm sure there'll be some areas that will have a huge pent-up demand after the election. All that I can say is, can somebody please build some houses out here? Because we've got buyers who would absolutely buy some homes if they had homes they could A, move into fairly quickly because most buyers don't want to wait 10 months to move, or B, if they had a good quality home builder and they knew that they could get the home that they wanted for the price that they wanted. So I think that's going to be the key. And I know the government keeps subsidizing buyers with down payment assistance and other types of programs to help make purchasing easier, but maybe they need to incentivize the builders or some of the sellers that are sitting on those 2.5–3% interest rates to move out of their homes and make way for new people. So that's really about it, guys. We don't have a lot of change in the market. It's going to be a little bit of a change, but most of it's going to be more of the same. And so if you've been sitting on the sidelines, waiting for the rate change, waiting for the election, waiting for the first of the year, you need to get off the bench because prices continue to increase, and you can only negotiate the price of your home one time, but you can change that interest rate whenever it becomes favorable for you by refinancing. So thanks for tuning in today. I hope that brings you a little clarity, and we will see you next time.